Hello, I'm David Cariani and welcome to the RFA Weekly Market Update. Stocks finished the week on a strong note, but the net returns for the week were relatively flat. We have a few straggling earnings reports to cover and we'll recap the progress of this season overall to date. But first, let's take a look at this week's market results. And large cap stocks were up over 0.25% and small cap stocks were down just a hair, while international stocks were down 0.6%. U.S. government bond yields dropped 1 basis point, while 30-year mortgage rates climbed by 5 basis points. The dollar index gaining close to 1% and crude oil rebounding over 3% for the week. And in a light week for economic data, we had weekly jobless claims coming at 222,000, down slightly from last week's reading. And then we had existing home sales drop to 5.4 million units per year. Keep in mind that drop is not a negative, but actually a positive for home prices because it's due to a reduction in available homes for sale. And now let's check in on the results of the earnings season overall. So this first slide, we're looking at the sales and earnings surprise versus expectations. And the top line representing the S&P 500 overall, with over 90% of companies reporting to date. We had sales beat estimates by an average of 1%, and earnings beat estimates on average by nearly 5%, with the energy sector being the only disappointer. And now let's switch slides and show the sales growth and earnings growth compared to the same quarter a year ago. Overall, for the S&P 500, we've had sales growth of nearly 8%, 7.71, and earnings growth of just about 15%. Very strong performance for the quarter. And in portfolio-related news, Walmart reported earnings this week of $1.33 per share, which was 4 cents below estimates. And revenue for the quarter came in at $136 billion, which was about 1% above expectations. The core business is strong with store traffic growth of nearly 2%, but investors are focused on their online business with sales growth of 23% for the quarter, which was viewed as a disappointment compared to the 50% growth of the previous quarter. As they continue to make acquisitions in the online space, these statistics will be choppy. They're expected to save about $2 billion of cash in taxes, which will be used to help fund their growth initiatives. But the stock did drop 10% after the release. And American Water Works, the New Jersey-based water utility, reported earnings per share of 69 cents, which was 3 cents above expectations, on revenue of $821 million for the quarter, which was about 3% below expectations. They expect earnings to grow about 8% this year and the new tax law to benefit them more over the longer term. But the stock is little changed for the week. And Leidos Holdings, the Virginia-based technical systems integrator, reported earnings per share of 87 cents, beating estimates of 85 cents on revenue of $2.52 billion for the quarter, which was about 2% below expectations. The company should benefit from increased defense spending, as that is where they derive nearly 50% of their revenue. However, deployment of cloud services is expected to grow at a much slower pace within the government sector versus commercial clients due to the funding and security concerns. This stock's price is also minimally changed for the week. And next week, we'll get an update on consumer confidence for the first time since the market's correction, and the Fed's January inflation data will be released, as well as earnings from Warren Buffett's Berkshire Hathaway. But that's it for now. Thanks for watching. We hope you can join us again next week.